Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, with nothing going on in the markets, being as quiet as they are, I thought maybe I would read some poetry to you today. I once was a poet and didn't know it. Well, that's the end of that. Folks, we are in some volatile times, as they say in the trade, and I wish the heck I could give you some insight as to what's going on with this coronavirus, but I don't know. When you have a country shut down like Italy did, I mean, it's very scary because if other countries say, oh, if Italy do it, so could we. And if it gets any better, that may is what it's going to be. So we'll have to pay close attention to this. It's very scary because it's so much in the news. And my gosh, I mean, they're just... He's talk about beating a horse. I mean, this is really a tough one to really try to understand. I posted the charts of the FTSE and also the DAX, and you'll be able to see that they've been selling off a little bit. Nothing dramatic. I mean, it's just been and last night, I mean, you know, we rallied up yesterday, and we took out you. This is if you remember, I told you yesterday the key level to watch in the S&P was 2881, and the reason for that was the high in the Sunday night session when it opened at 2880 and broke all the way down to 200 some handles. Isn't that what we did? Down to 27, whatever it was, almost 200 handles. And so we went up and we took out that high by 3 points, I believe, and that's when it started to roll over right at the end of the close. Now, remember, these markets, when you see them run like that, like they do the last half hour, that's algo trading, folks. Those are, you know, people, they start feeding on each other, and they just run like hell. And you're talking about 1,000 points in the Dow like nothing anymore. I mean, I watched it last night, and I was seeing 500-point swings, 300-point swings, just back and forth, back and forth. Now, let's take a quick look at what's really happened here in the S&P. I don't know if this will help you or not, but we'll bring it up here to try to give you some idea of what we're looking at. Remember, this is all technical; has nothing to do with the actual market. Let's get this up here, and I want to show you here where we are. Let me get up here. Well, that doesn't look right. Yes, it is. It's correct. Hold on. Let's get this chart up here. Here's the chart on the S&P. You'll notice that the rally that we had on March 4th, that took a one-day rally. We rallied up whatever that same number of points that we just did yesterday. Did exactly the same thing in almost the same time frame. And now we're down here at this 2770 level. Now we get below 2740, we're going to start moving down a little lower, of course, but we'll do one thing at a time as we see it. At any time, the Fed could come in and do a little bit of, shaking and baking, and it doesn't take much because once this market starts up like it did yesterday, people will, they get scared and the short's covered. And anyway, that's all I see. Now, last night, I did post that chart for the folks to let the folks know that was probably the time to sell. But we also were looking at another one, and I posted this. Several hours, many hours ago. I think it's smart enough to bring this up, and because I sent this out for the 24/7 people last night, and that was to sell the crude oil at 35.43 because that was a 382 retracement. You'll notice off the high that we made back here. It was also a nice ABCD pattern, and now has a little over too large, about 2,300 in it. Whether it's going to keep going that way, but I said protect some of it, and we'll see if that's going to be the case. Also, we still believe that the gold is headed lower. The $64 question is where is it going to start down from? The logical place today was around the 1666 level, the old sign of the devil. Okay. Okay. Oh, yes. Larry, can you recall the impressions of the day Rubin and Green came out in the midday? Oh, yes, I can remember that very vividly. I believe it or not, I had been short most of the day, and I had a small, very, very small, long position on, and not knowing anything. But folks, here's what was happening. Let me give you an idea, just using today's prices. The S&P was trading at, this is going back now to 1998. The S&P is trading at 2770. Okay, and the first tick that, because I use limit beepers, if it hits certain levels, it tells me that, wake up, Larry, look at something. And the beeper that I put it on was about 20 points higher. Okay, folks, they destroyed everybody. I think the first pip was the first tick was I think 50 points higher, maybe 60, $2,500 or $3,000. This was back when this was 98, folks. That's 22 years ago. So you can imagine how much money that was. That particular thing that they did bankrupted more floor traders than what happened on the October 19th of 1987. And you have to realize that Rubin's best friend was Greenspan. They had breakfast several times a week. And you don't mean to tell me that Rubin might have said something, or Greenspan might not have said something to Rubin, who was running Citibank. I think he was Secretary of the Treasury at the time, yes. That, they probably, hey, you think that's not coordinated? Shut the front door and raise the rent. Does anybody talk about it? No. Does anybody talk about white-collar crime? No. You steal a package of cigarettes, you get 5 to 20. You rob $30 million, you get your slap on the wrist. So I don't know. And we'll see what happens. Anyway, I remember that very vividly that day because it was really bad, and I had a couple of friends in Chicago that got they didn't have to sell their seats or anything like that. And now the price of the seats are so high they could afford to sell them because the seat prices went to like $5 million or something. So I've had a request from Mr. Z, and I'm going to do it right after we take this break here because he's asked to go over these things that I looked at in 2009 and currently where we are to see if these things mean anything. And I wish I didn't. I'm just going to tell you the derivation of it. I think it's important enough because, when I did these things, I checked with a couple of guys that I know that are pretty smart. I said, did you ever look at it this way? And they said, no, we didn't. And this is what Dr. Miller told me to look at back when I was a little shaver down in Sarasota, Florida, where she was teaching me this stuff. And I'll go through it one more time because it is big because it's what happened in 2009, and I think we're probably looking at it again. I think for sure that we're going to be looking at a multi-year bear market here, probably 3 to 5 years, but heck, well, I'm wrong a lot. We'll be right back, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I was hoping to get Shane on the air this morning, but evidently he sent me some charts, and I wanted to share them with you because it shows the virus and the number of cases and the number of people that have been recovering, and you can see the number of deaths. So, like the guy said on TV last night, old people deserve to die. I don't know if he meant it or not, but he said it in tongue in cheek, and it wasn't deserve to die, but it was are ready to die at any time. So who knows? Maybe we do have Shane on the line right now. Try to contact him if you could, Al. I'm sorry. This is spur of the moment, Al. I'm sorry to put you under some pressure, but he sent these great charts, and I wanted to let the folks see them. So hopefully, if you can, we'll get him up. He gets pretty busy sometimes near the open, but we'll see what's looking here. This is another one. These are most cases are confined to the Hubei, China, which is Wuhan. That's the Hubei, China is like the state, and then Wuhan is the city. It's a city with several universities. I've been to that place 6 times. I've spoken there, and a really nice people, beautiful city, river running through it. It's a really cool place. But you'll see here that most of these are in China, and what's strange is that Iran has so many of them. That's really quite amazing here. So we'll see what's happening. Okay, he is too busy today, so we will try to get him on at another time, and hopefully we'll be able to do that. Now, I did mention when we were looking at that crude oil, one of the reasons why you look at crude oil is, remember in Gartley's book, he said on page 222, he said, look for the first A, B, C, D in a bear market and try to sell it. And if you look at that crude oil chart that I posted, there were 2 of them there, one back at 48, and we were certainly in that one, that's for sure. And then we were fortunate enough to get this last one off last night, and we'll see how it works. But we've locked in a $1,500 profit on that one to see what's going on. Folks, I'm going to cover the astrology stuff in just a minute, but there's trouble brewing in one of these markets that nobody's watching really closely, and that is the Treasury bond market. Boy, oh boy. This market broke $15,000 yesterday. and has only bounced a little bit so far. If you remember yesterday on the show, I said watch 184, and we went a little above 184. From 184, we went all the way down to 177. We dropped 7 handles, and we've been able to bounce a little bit off that. So very, very interesting. And the open interest is certainly negative in that. And believe me, folks, remember, they use the bonds as a flight to quality and safety, right? Judge's ruling. This is not safety. When you get a market that's moving $15,000 up and down, you realize we're below where we were Sunday night, or Monday, or last Friday, whatever it was. We took out that low. Now, real bull markets are not going to do that. That $15,000 up, $15,000 down. We've seen that more than once. That's the main thing. Keep an eye on it. Now, I've got a chart here that someone's asked me to take a look at, and that is the United Airlines. And I'll be able to get this up here. David, you are one funny cowboy. All right, here's United Airlines on the weekly basis. You'll know here that it's pulled back to a 61% retracement. Huge volume, by the way, in the midst of all this. And the fact that they did hold that level is quite interesting. But, boy, that United Airlines has to stay above 46. Otherwise, it's going to be something that will be quite amazing. So we'll keep a close eye on that as we look at that today. Now, Mr. Z has asked me to talk about these aspects that I looked at. I'll start out with the one that sent to us by Norm Winsky. This, what I asked Norm to do was send me the transit chart for March the 9th, and that's what I wanted to see, what was happening on March the 9th. And as you can see here, this is from 2020. That's the stuff that we got going on in here. That means that should have been a pretty good bottom. But if it's not, then that's the real problem. The reason why I believe that it's important, because if you look at this, this is the same type of aspect that we had back in 2009 on March the 5th. I can't get the bottom there, but you'll notice that the Dow was trading. The low that day was at 6,400. In the Dow, that was a 3 drive to a bottom pattern, 1.618 expansion, and all of those aspects coming together. And that's why I said, well, this is probably going to be the biggest short covering rally we've seen, and I didn't realize it was the start of the biggest bull market that we've ever seen. It lasted 11 years, and maybe it's still going. I really don't know. But the reason for that is because of this is what happened back here in January. Remember, late January, we were talking about this, that we were looking for that 3 drive pattern in the S&P up in that 3380 area, and you'll see that occurred. Now, this thing lasted 2 weeks, which was a pretty good thing. Yes, we've got the equinox coming in, and that certainly means something. We'll see. March 20. I haven't looked at the 20th of March transit chart, but I will definitely look at that, because that could be a very important thing to pay close attention to. But the reason, let's just give Dr. Miller the real credit that she deserves. See, this is where my I've said this too many times, but since nobody's listening, I'll say it again. Hold on here. This is from one of the pages of the book, Astro-Cycles: A Trader's Viewpoint. We printed these out. You see all those aspects there in October 1974. That was the first bottom there. It doesn't have a black arrow, but that was the first bottom. The second bottom was the one in December. It had the same thing, because many of these were they're going in retrograde motion. But look at them. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Between the 21st of October and the 31st of October, you had 10 aspects in conjunction. Boy, when you see that, you better pay attention to that one. And I saw that, and I said, okay, let's go back and see when we have some others. And that's what we did. And so we looked, and by golly, guess what happened? We had a couple others coming up, and one of them was here. Well, this is March 5th. I'll do that one last. I'll get the other one up here first. But here was the big one, and this is the one that, this is the one from 1987, August the 25th. You'll notice there were 5 major conjunctions not 8 like we had in 74, but there were 5 of them here. And I said this was probably be the top of the market. And I was on FNN in Los Angeles with Bill Griffith before this happened, and then after it happened. And I was in there right around this time. The market had hit 2,500 and was rallying back to right around 2670 was a 61% retracement. That was on October the 2nd. And I was on in late September 25th, 26th, somewhere there in Los Angeles. And I told Bill that sometime during the month of October, there was probably going to be a Dow Jones down at least 300 points. And all I did was I explained that the previous one was 190 points, multiplied by 1.618, and I got 300. That's how I came up with that 2,000 that we came. And believe me, the next one will be 3,000. So we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to get to your attention here for just a second. That I wanted to talk to you just 1 second about that top that was in 1987. That was a thing called harmonic convergence, and it was a lot to do with the hippies and stuff like that, but it was in the news, and then nothing really happened. But that's how those things happen, and frankly, I wish I knew more than I did, but I don't, and that's the truth, and I'm sticking to it. That's all I know. Folks, I look at patterns. That's all I try to look at. Now, I've been asked to take a look at the open interest one more time, so let's take a quick look here. This is the, by the way, I made a video about how to look at open interest. So if you want to see that video, you're more than happy to see it. All you have to do, Larry Pesavento at gmail.com, include it with your $350 plus tax and licenses, and I'll be happy to send it to you, but it's actually free. Let's take a look here. This is right from the data sheet every day around 10 o'clock Chicago time. They bring this out. You'll notice up at the top here, you'll see the first arrow is at the E-mini futures for the NASDAQ, and you'll notice here the open interest is 223,000. It increased by 6,000 yesterday. The open interest is 8%. Of the E-mini S&P that you see in the lower area has 3.4 million, and it increased 229,000. Okay, 229,000 in a market that was really, really bad up until the end of the day. So you don't know whether those last dudes were the first dudes or the last dudes. All you know is the big increase in open interest. So the fact that the market came down again, you'd think that they might have been on the right side, but that I don't really know. So that's what we're seeing. See what's we're going. The S&P. I think we shouldn't get any higher than 2810 on this bounce, if that's correct. I think 2810 is the number that I'm looking at as far as the bouncy type stuff. We'll see, whether we do that or not. It's still a little bit early. The one that is the folks, look at this, folks. I wish I could do the open interest for the Treasury bonds to show you the difference between the players that are in the Treasury bonds versus the players that are in the other one, because it's truly amazing, because the bond market is many, many times bigger, and that's where the real real rocking and rolling is. So that's it. All right. Someone's asked a question about what is my expectation of what will happen. First of all, I talked to some pretty smart people, a lot smarter than me. In fact, my mom told me when I went off to college, she said, you hang around with the boys who are a lot smarter than you because you might learn something. By golly, that's what I did, and it was good advice. But if Italy shut down, they basically locked the country down. Stop and think of this a little bit. Then what would prevent any country in the European Union from saying, hey, I want to shut down too, Germany, France, whatever? They could do that very easily. And what this is doing is it's shutting down economy. It really is. And remember, many of these people are just barely hanging on by their nails. And if they have no money coming in, they lose their business. And the first thing these big companies are going to do, or these companies, you think they're going to keep paying people when they're not working? No, they'll start laying off people if it lasts very long. The way that it's acting, it doesn't look like it wants to act that long, but you don't know. We don't know enough about it. It's only been about 6 weeks that we've been exposed to all this. But remember, we're up to 117,000 people, worldwide now. 117,000 versus 7 billion is nothing, but it's growing so quickly that that's what you have to worry about. The good part about it is the fatality rate is relatively small. It's us old dudes that are at risk. And this is where I'd like to bring up a proposal. Since I'm at risk and you never know what's going to happen, I'd like you to send a donation into my GoFundMe page. Okay, you can find it there. Just go to GoFundMe and you'll see it there, and just start sending money in as fast as you can so I can enjoy it, because maybe, and I'll send it back, of course, if something happens that it might not happen. Who knows? I'm going to bring this one up to you because this is going to be 10 years from now, somebody here on this show will be talking about these things because they repeat over and over again. But GoFundMe. Okay. I see. Oh, the first ones have come in. Thank you, Marshall and Mr. Z. All right. This is the bond market. You can see those big moves there. And we, of course, we exceeded this one here. We went far above it because this was before we had the last 2 days. This thing went, I think, about 5%, if I'm not mistaken. But the October 1982, that was the bottom in the bond market. The 87 crash, that was the flight to quality. And the March of 2009, you see March 18th, that was 10 days. That was 10 days after the bottom was in, folks. And so this is what you're seeing here. As you remember, it was just really big. And the problem is when you they think that's a flight to quality. In fact, it's not. We went to zero interest rates in those 30-year bonds, and now they're paying 1.3%. And so we'll be able to see if that's it. Yes, those are very good when you get gift certificates to crematoriums. Usually your really dear friends are going to be doing that. And if you're in the St. Petersburg area, remember the firm of Dewey, Cheatham & Howe. They do some of the best crematorium work in that area, and they're the ones that are going to be taking care of me so I can ride out on one of Tom's yachts, and that they can sprinkle my ashes over the Bay of Tampa. And we'll see what's going on here. Okay. Let's get moving on to a question of where the market might be long term. And this is a chart that I think really gives you an idea of where we could be. I'm not saying that's where we are. Folks, Jimmy's asking a question, how do you provide thoughts on how gold would? I sent a special video out on gold last night, and I said it was a sale at 1666, and that's the high has been 1670 or something like that. But I think gold is bearish. It just doesn't look, and Bill Meridian is of that frame of mind too. And yesterday, Jimmy, with the hold on, let me get this chart up to show you what we're looking at. Yesterday, Jimmy, the open interest with gold popping up there above that 17,000 level, big drop in open interest. And then the second, what happened yesterday? Another big drop in open interest. So there's no new buyers coming into gold. It's just a question of time before the shorts, can't cover anymore, and then there's not going to be any buying, and then it'll fall. And silver just looks flat out pathetic, So that's what I'm watching here. I hope that helps, but that's what we're paying attention to. So keep in mind that's what we're watching. So. Okay, well, we hit that 2810. That's about it. We shouldn't get any higher than 2810 in the S&P if it's any good. And all I'm doing is looking what happened in the past. There's nothing mysterious about it. It's just that's what we're looking at. Okay, the other one, the crude oil is just the crude oil, folks. We're going to go, I believe, lower. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted the chart here of the Nikkei 225 weekly. You'll notice it hit an exact 61% retracement of the low from 2016. That means something, folks, in my opinion, because we did the same thing in all of our indices. And most of them have held up. The transportation hasn't, but the others have held up. So it's going to be interesting to see if this is going to be the case or not. But, we're going lower. It's just a question of when. That's the $64 question, but I don't know the answer to that. The market that's, I believe, the most vulnerable here, and hasn't even hit the news yet or anything, is the bond market, because of the fact that it has this volatility. It has this giant spike that's way up in the air, setting a record, only seen 4 other times. And so that's where the real problem lies, because people think it was a flight to quality. Hey, when it's going up $15,000, it's not only a flight to quality, man, hey, I'm making some serious bucks here. But when it starts down, that's interest income. You don't have it has zero interest at the top up there. In fact, you owe them money. That's when the real problem lies. And I don't know. That's my 2 cents worth. Let's see what's going on. Okay, another question. And this is a chart, folks. You got to pay attention to the charts that David White sends out here. Through his charts that he has with Tom O'Brien. He's got a great chart here on the wheat. You'll notice this is the ETF for wheat, and you'll notice that it has a perfect ABCD pattern and a 1.27 expansion, and that is a beautiful pattern, and it should hold. So that's the good part about it. Sometimes they work, sometimes they don't, but that's the whole reason of why things work, is either by probabilities. That's the main thing that we're watching here. Now, also, I wanted to mention just a moment here about the Hold on one second here. I want to get this. Where is it? There we go. I wanted to talk a little bit about the dollar index, because we've had this little bit of a reprieve here. We've had this little tiny, and this is really the definition of a dead cat bounce, folks. I mean, we're not even near the high of that big spike down move. So this is just a very, very minor bounce, and the euro has backed off about 150 pips, and it might get a little bit lower, but that's about what it looks like from this level right here. I think the U.S. dollar is under extreme pressure. Now, this could change at any time, and if it does, I'll certainly try to alert you to it. But right now, after that big ABCD pattern, boy, this is really telling you that something is happening. And, well, we know what it is. I mean, everybody's being scared to death by the news. I mean, look at the if you just go in and John Jameson has got me interested in reading the headlines, because the headlines tells you where the action is. And of 8 major articles by the major papers across Europe, 8 of them, the 10 most articles, 8 of them are on the virus, and the other 2 are about this upcoming race at Astor. It's like the Kentucky Derby of London, and there's going to be a lot of people at that place. So we'll see. Okay, we've got Victor from New Jersey on the line. Victor, how are you?
Good. I'm looking at a stock called GT, Goodyear Tire and Rubber. I was just wondering if the blimp had the virus, and that's what's making the virus spread.
I don't understand. You mean that
GT is the stock? GT.
Yeah, I understand.
Tire. So maybe the blimp has the virus, and that's why the stock is taking a beating. Take a look at it. The dividend, is that sustainable, GT?
Well, I don't think the blimp is doing that, but if you're a conspiracy theorist, that would be the big one.
It might be good, right?
That makes good sense. It'd be a good movie anyway. Unfortunately,
yeah.
I won't be able to look at GT. I'll have to do that for you tomorrow, but I will do it tomorrow.
Yeah,
but,
look at it. It looks like the Hindenburg. I don't know.
Yeah, well,
going
it might
down.
be.
It's down to $7. It pays 8% dividend. It's a rubber. They make tires and rubber. Why would they be?
Well, sure. Well, they're very, very famous for sure. So we'll see.
Yeah.
But that's a good.
And why would that stock be taking such a beating?
I don't know. Did you ever see the movie with Black Sunday with Bruce Dern going back in the 1970s? How he went after the Super Bowl. That was.
I work too much. I got to support the people that don't work. But anyway, what do you think? What is rubber going to take a beating or something? Nobody's driving. What do they think?
It's what's happening now. It's a giant fear. They have a dividend, but the problem, Victor, is if they've got an 8% dividend and they don't have any money come in, what do you think is going to happen to that dividend? It's going to be cut.
Oxy did yesterday. I think one of the big oil companies in the stock went up.
That's exactly what they'll do. And that's what happens to these companies that don't have money coming in, and they're going to have to start cutting back. They're going to cut back on what? Employees, because they're going to be worried about their own backside. They're not so much worried about their employees. Many of them are.
They're over-exaggerating this whole thing anyway. It's like 911, but it's like another 911. They're just using it because the government has no money, and there's a debt payment due next week, so that's what they're doing.
Victor,
going back on a gold standard next week.
I think you should watch more of Frasier and Cheers. Lay off the conspiracy theory shows, okay? Hey, listen,
I make
Victor,
up my own theories.
I know.
All right. Have a good one.
Working. So, hey, thank you for calling in, Victor. I appreciate it. Okay.
Bye.
We have to send Victor over to talk to either Rod Serling or Gene Roddenberry. Okay, let's get on here to see if that market in the S&P is held at 2810. Yep, so far it's done that. We'll see what's going on here. Okay, I'll give you one other little thing to watch really closely, and that is to watch the old bondolis at 122.24. Watch the bondolis 122.24, coming to you from the folks at Suspect TV that talked to you about 184.12 yesterday in the bonds. Watch it closely because that's where the real players are. Anyway, we'll keep looking at these things. The good part is, folks, we're going to get through this eventually. The Spanish flu of 1918 killed 50 million people, but remember, that was a lot of people because there weren't that many people on the planet at that time. I think only about 3 billion. But if you and it was much more vicious than this. The death rate was like 35 or 40%. Remember, we didn't have the medical facilities like we have now, which is usually pretty good. So as long as you're not old, see, this is why we have to fund that GoFundMe page for me, folks. It's very important, especially coming in. I might only have a few more months to go, and we got the first Saturday in May coming up with the Kentucky Derby, and boy, I've got a couple of really nice looking horses that I'll be able to wheel in an exacta if you send me some money. So that'll be fun. And I'll share my winnings with you. You betcha. You can always depend on that. Okay. Another question, someone asking me, check is in the mail. Yeah, I got that one. All right. Let's take a quick look here at one other one, and that is the I already did the Nikkei. Sorry about that. I'm getting behind myself just a tiny little bit. I want to show one other one that was here. This is it, I believe. Okay, here is the situation in the crude oil. Someone's asked me to talk about this. They sent me a really nice chart that shows how much the cost of production is for the break-even points for these things. You'll notice the Saudi Arabia break-even point is about 80. United Arab Emirates is about 70. Iraq, about 60. Kuwait, U.S. is about 48. The U.S. Midland Basin, 48. Russia, about 48. And where are we trading? 33. Not good. Not good. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. So far, we've held those lows from the other day, 2740. If we start getting below that, we're going to getting pretty close to that limit down level, I guess, in the E-mini. But we are going to go lower. The question is, if we do have a rally, how much higher we're going to go. If we can get above 2880, then this market could have legs because wobbly legs. But we'll see. I don't believe it's going to do that just by looking at the action that we're seeing right now. But things can change in a heartbeat by the Federal Reserve or whatever. Remember, they dropped the rates over in the UK, in the EU. They dropped it by 50 basis points down to 25 cents. But folks, it don't make it 25%, 0.25. But it doesn't make any difference because these markets are operating under fear, and fear is a greater emotion than greed. And that's why the markets go down faster than they go up. So sort of keep an eye on that. That's what's really interesting as we look at some of these things. And that's pretty much what we're watching. Yeah, 50 basis points is what they dropped at the Bank of England. I listened to Carney for a little bit last night to what he was getting across to try to calm everybody. And believe me, people are scared, and as they should be, because if something happens that we find out that what the information that we got from China on the death rate and stuff is not right, that could be a game changer. But right now, the statistics that you're showing us shows that the death rate is relatively small compared to flu. We lost 69,000 people in the United States last year. Flu, like most of those are old people. You know, Kelly passed away here on December 4th of last year, December 14th. He was 95, and so, you know, when you get to be that age, that's what's happened. You get pneumonia, you fall asleep, and you're gone. That's the way God made us. So that's not neither here nor there. Okay, our debt has, Ruby's asking a question, do I think it has to do with the debt? Yes, Marshall, we went out several times with Kelly. Yes, I do. It's related to the debt by a whole lot. That $64 question is, when is it going to kick in? And I don't know, you know, whether that's going to be the case or not. So, okay, folks, we'll see you on the flip side tomorrow. And 877-927-6648.